Ladies and gentlemen, fellow traders, friends, welcome to the live show. Good to have you all back. Good to see you again. I know I haven't been doing the Tuesday live show lately, had a few issues in the background, but we continue with the Thursday live show. In the meantime, most traders don't lose because of their system. Most traders lose because their system is chaos. So today we're going to go over that. We're going to go over that procedure, why we trade three ways, why we have a three-stage business plan. It's so easy and so simple to use. So I'm going to talk to you guys about that in the show today. Let me take my giant picture here, move it up into the middle and make it really small and out of the way. And we can go and have a look at how the markets have been doing up until now. And I know I haven't been here for a couple of days, been busy, had my issues. So Tuesday didn't make it. And for 2 weeks now, I think, actually. It's been a bit tricky. Let's go and see what's been happening. And then we can go over those three-step systems and three-step strategy. There's a difference between system and strategy. The system is these charts that you see in front of you, all these little squiggly lines that you trade with. That's what you use to manage your trade. But the strategy is something completely different. And I've got a three-step business plan that I use on a regular basis. But we also trade three ways, and we're going to go over that. We're going to go over that in detail. But let's start by just having a look at the markets as we stand at the moment. Here's your S&P 500, and the S&P 500 has been doing some unusual things in the last couple of days. As you can see, it has created a bit of a head and shoulders, but it's not definite yet. And it is kind of running between this trend support and this trend resistance. But the tech stocks are the big issue here. They've been sort of getting a deeper correction, and they've been going, just like the S&P. But today, Amazon is releasing. Now, there is a question mark here because, once again, I'm seeing another head and shoulders. When I start seeing all these head and shoulder patterns in the markets, it kind of means to me that something's going on in the background. Something's about to happen. It just sort of it's like alarm bells ringing. I ignored it once before. I think it was in the 2008 crash or something like that. I was ignoring it, and thinking, it's just there, it's nothing. And then suddenly everything went pear-shaped. It was actually quite interesting. So since then, I've learned to keep an eye on it. Just keep your eyes open. Look at Bitcoin. Head and shoulders on the day. I made a note of it here on the chart, because if you take this to the day chart and you make it a lot smaller, look at the size of that head and shoulders. And this is Bitcoin. Crypto could fall. Bitcoin could fall to 40,000. That's quite serious if you think about it. Wow. People are heavily invested in this baby. There's a left shoulder, there's a head, there's a right shoulder. Look at the projection of the shoulder. I've drawn a blue line in the bottom here so you can see the projection. It's down at 37,000. If it follows the whole head, and it's already broken below the shoulder. So this is insanely tricky. This Bitcoin thing, I don't know. This could go very, very low. Look, if it does, wow, maybe buying it at 37,000, 47,000 won't be the worst thing in the world. But yeah, if you are holding it, just bear in mind, you could be looking for a bit of pain ahead if this plays out. It might not, but it most certainly might. So that one is looking pretty iffy. I noticed it clearly on the US dollar, Canadian dollar as well. When you look at your chart, you see this and you think, that's fine. But if I've made a note here, there's a head and shoulders on the day, because I would have taken this trade long here because it's broken the trend resistance and it's broken structure. So it's moving to the upside. We'll go over that shortly. And I made this big note here so that I wouldn't forget. So that I go back here. When I do my research, I make these notes, and then I go and have a look. And then I look at the size of the head and shoulders sitting on the US dollar, Canadian dollar. There's a shoulder, there's a giant head, there's a shoulder. The only time that this is negated is actually when it breaks the shoulder, and the shoulder is up here at the resistance. So you could trade between the two here, but with high risk, looking at the possibility of this playing out. So that's why I make notes when I'm doing my research, so I can come back to it at a later stage and say, ooh, look at that. That's actually quite interesting. And that could easily have gone down and really fallen heavily. So, you got to keep your eye on it. Here's the NASDAQ again, going down. Hello, Blue Mango. Hello, Beverly. Good morning. And Elaine, happy Thursday. Good to see you. Daniel, lovely to see you. Laka, good to see all the regulars coming back on the show. It's always good to see you guys. So what I'm going to do, I'm going to go over the three-step, the three ways that we trade and why we trade that way. And because most traders end up in chaos on their charts, and there's all kinds of indicators and all kinds of lines, and they get all complicated about their trading, and they start talking in technical jargon that I don't think anybody understands. Even the most professional trader will look at you and go, yeah, oh, really? Okay. And then walk away thinking, what did that person just say? No, look, at the end of the day, you don't need to get involved in all kinds of technical jargon, abbreviations, or anything to that effect. All you have to do is make money in the markets and make a profit. So let's go over that. Let's go over this whole scenario. You're causing chaos in your trading. You're making things far too complicated for yourself, and you're creating loads and loads of work for yourself that you really don't need. Why do you want to create so much work for yourself in the markets when it can be so simple? What I'm trying to say to you guys is you've got to simplify your trading. You've really got to bring it back down to the most simple way you can. So take a chart with absolutely nothing on it. So here's the US dollar Japanese yen. There's absolutely nothing on it. But if you look at this chart, it's kind of meaningless. It's kind of not telling you much at all. And perhaps because it's a little bit big at the moment. Make it a little bit smaller. See if you can see anything. Still a little bit tricky. Not much going on there. It's very bullish here. It's recovered from a bearish run. Really not telling you much. So what you normally do is understand the one thing. We trade three ways. So the three ways that we trade are we trade with the trend, whichever way the trend is. The trend is your friend. You've heard that saying in the market probably a million times. The trend is your friend. Well, not really, but we'll keep the saying. We'll keep the trend is your friend. Why not? Well, we'll use that, okay? So the trend is one way we trade. And I'll explain why we use the trend in a moment. But I'm not a trend trader. I don't just trade with trend. In fact, very much the opposite. Then we trade in a range. And a range is between the support and resistance, right? When it's going sideways. Sideways doesn't mean it's on a zero. It means it goes from one point to another. And that point can be a big distance. It can be from there to there. It can be quite a big distance, right? And the third way that we trade is with breakout trading or counter trend. In other words, it breaks the structure. Break of structure. It's a fancy term for it breaks the trend, okay? Or it breaks out of the resistance or support. Those are the three ways that we trade. But we trade with those three systems in conjunction with each other. Do you see any indicators on this chart? No, we don't need them. We don't need any indicators on this chart. The only indicator that I would advocate that you need to use once in the blue moon is an RSI or a volume profile, depending on how you feel. But I don't need it. But I mean, a lot of the pros, they love the relative strength index. So you can follow the pro money quite easily with a relative strength index. The coffee's back. I just took the sugar out of it. That's all. Used to love drinking coffee with sugar. Now I've taken the sugar out of it. It still tastes good. Right. So at the end of the day, first thing we got to do, take it to the day chart. That's the easiest. If you take it to the day chart, then you're going to get very valuable information on your chart. You're looking for that valuable information. So what we're going to do is we're going to, on the day chart, make it as wide as we possibly can. So we get a picture of what we've got here. Because what are we looking for at the end of the day? We're looking for the top, we're looking for the bottom, just to give us an indication of where our range is, because there will always be a range. Things don't go up in straight lines, and everything's not a lamp pole. There will always be an area of relaxation where it sits in that range and there'll be an area of money at the bottom. There'll be an area of money at the top, and you can immediately see where the area of money is at the bottom, and you can immediately see where the area of money is at the top. There's money, there's money, there's money. It broke through a little bit there, but that's okay. Now, where's the bottom one? The bottom one's here. It's so clear you can see it clearly. I'm going to make that red so that everyone can see that that's the bottom. So now you've got a support and resistance. Now you've got your range. So you're trading in a range, but you're also trend trading. But what we want to do now, we don't want to draw our trends on the day or the weekly, monthly, because those trend lines tend to just disappear on the chart. So keep your trends to the time frame that you're trading on. It makes it that much easier to trade with. For those of you who don't know me, I do prefer to do these little trading sessions on the live shows for you guys on every show so that you get something out of the live show as well, besides just watching somebody looking at trades or talking about trading. It makes it a little bit better. And for those of you who don't know me, I'm Rob. Those of you who do know me, I haven't changed my name. It's still Rob. We'll leave it at Rob. It's good. It's a good name, eh? And there'll be a few other Robs on the show somewhere down the line. Now, let's go and have a look on the H4 where we stand. Now you take it back to the H4. Now that looks pretty wide. That's a pretty wide area, but that is what it is. It's a pretty wide area. What a lot of traders will do is they'll draw a million lines in between here, making it very, very confusing for yourself, because now you've got all these different lines to worry about and think about. And when it hits that line, then it's going to go up, or hits that line, it's going to go down. And you're never going to take a trade. Because trading is 50-50. I've told you this a million times, and a million people disagree with me. And I don't mind. It's okay. You can disagree. It's totally up to you. I'm not here to push my trading system onto anyone or to tell anybody that I'm right. In fact, all I'm doing is showing you where I've gone wrong and where I've gone right in my trading career, and maybe it can help you. I don't know. So you have to understand that trading is 50-50. This is something I worked out through the years, that every time you take a trade, you have a chance of winning that trade and you have a chance of losing that trade. That's what it's all about. Nothing else. It's not about a situation of 2-to-1 or 4-to-1 or anything to that effect, or the system. The 50-50 principle comes with, no matter what your system, remember that every single trader in the market, every single trader, whether it be a retail trader, an investor, an institutional trader, whoever, guess what? They've actually all got a strategy. Every single one of them has got some form of strategy, would you believe? And that strategy is going to play into their lives. Now, what you see here is your support's all the way down the bottom here, so you know the support's really far away. So your reward on a short trade here is quite decent. It goes quite far. And your resistance is pretty close. So a long trade, risk to reward, pretty poor as far as things go. And I know fundamentally that the Japanese government doesn't like the yen to be above 150. So they'll do everything in their power to make it try and go down. So now I've got all those things in my head, but now we trade three ways. We're trading in the range here. The range is, well, we'd go short in the range. When it hits resistance, we would go short. But you don't have to wait for it to get to the top. What you can do is you can take the trend. Now the trend is your friend. So we're going to take the trend and we're going to try and get 3 points along here. Now we have to understand that that bit did break through. Just accept that. Just live with that. Because otherwise your trend is going to be all the way out here, which you can have that as well. So you can have the two trend lines, right? Just to say to yourself, all right, I know that that trend is there and I know that that trend is there. So I've got two options here. The point being that if it stays in trend and it keeps going up in trend, then it's going to remain bullish and it's going to go up to the resistance. That's trading in the trend. But I prefer to trade the counter trend, because the counter trend usually gives you quite a lot of room, a lot of win, a lot of reward. Because this, you know, your reward is very low for the risk that you've got to put in. So I would look at this as, let me look for the short trade on this particular product. And that would be when I get a break of structure on this trend support to the downside, then I will look for a short trade all the way down. It may bounce off of this trend line as well, so I'll keep that in mind. But if it breaks through that, that's my second round, and off she goes to the bottom. That would be a nice short trade, and that's what I would be looking for. That would be my trading scenario. And that is the 3-step business, well, not structure on system. That's the 3 ways that I trade. I trade 3 ways. There's only 3 ways that I trade, nothing more than that. Okay, I don't look for other ways to trade or magic pills to fall out the sky or magic systems, because I understand that I'm going to lose a rather large percentage of my trades. 50% or more of my trades going to be losses. Now, how do I negate that? Well, that is with this 3-step business plan. 3 is a magic number. It's a really magic number. 3 is a special number. We all know this, but I have a 3-step business plan, and we trade 3 ways. And the 3-step business plan, as you know, is very, very simple. And it's simply structured so that you can control your losses and make more profit. The business plan is simple, and that is to make more on your wins and lose less on your losses. That's the objective. The objective is to make more on your wins and lose less on your losses. The way you do it is the 3 steps, and that is, firstly, you have to look at the trade and determine your invalidation area. But to do that, you must understand that you need to keep your risk the same on every single trade. So in other words, if you were taking a short trade here, you need to understand that your risk, no matter where you put it, will always be $1,000. Okay, it's just the way I've set this up. It works out at $900 and something. It just is what it is. Okay, and when you keep your $1,000 risk in place all of the time, no matter what you feel about the trade or how good you feel about the trade, then you understand quite clearly that no matter what, you can only lose $1,000 on any one trade. If you have a $100,000 account, that's 1% of your account. If you lose 10 trades, you lose $10,000. You've lost 10% of your account. Will you lose 10 trades in a row? In all probability, not. But if it happens, you ain't out of the game. You're still in the game. If you want to risk 5%, that's up to you. If you lose 10 trades, you lose half your account. If you want to lose 2%, you lose 10 trades, you lose 20% of your account. You decide. You decide what your risk threshold is and how you want it to play out. But keep that the same no matter whether your account goes up, whether your account goes down. I tend to withdraw my funds out of my accounts because I don't like leaving my money with brokers. I prefer leaving my money in a share account or in a bank. End of story. Share investments are probably the best place to leave it. Well, they are the best place to leave it. And that's an investment that's protected by the stock exchange that you're working with, whichever one it might be. So keep your risk the same. Determine your risk first. So in other words, that's the first step of the business plan. Where's my risk going to be? So my risk is going to be above the prior high, above the resistance if I was to take a short. I'm just throwing this out there, okay? I'm not going to take a short on this trade now. I'm just saying if I was going to. Now, there's the short. So that's my risk, first part of the plan. Then the next part of the plan is to look at the trade and work out my lot size to the actual trade, okay, to the actual purchase price. So that's quite easy. There it's worked out. You can actually calculate it, or you can have on TradingView, it works it out for you. This one, I got this little thing which you get off MQL, and it works it out for you as well. Or you can get a calculator out, work out your trade sizes. So work out how many contracts, how many pips, how many points, whatever the case, you need back to the cost. That tells you your lot size, tells you how much you're going to buy. Now you know $1,000. All you need to know is, can I make more on my win than I'm going to lose? Can I make a bigger profit than I'm going to lose? Obviously, I'm going to take my profit all the way down to the bottom here in the long run. And I can manage that trade all the way down. Or if it was only to come to here, would I make enough reward? Yeah, sure. It actually is more than 1-to-1, which is fair. You're going to find trades that are 6-to-1 like this. You're going to find trades that are 1-to-1. You're going to find trades that are 2-to-1, 3-to-1. Average out over a period of time, your trades will come out at probably around 2-to-1. And that's what you're looking for. And that's all you need in your trading system. People who say they get a bigger win rate are usually people that are not achieving these targets. They're normally making less than what they're risking, and it doesn't really work this way. They never really achieve proper targets. Win rates cannot make you money. Win rates will never make you money. Why doesn't a win rate make you money? Because if you win 8 trades in a row at $10 a trade, that's $80. And out of the 9th trade, you lose $800. That kind of equates to a rather large loss. Even though you've got a huge win rate, you're never going to make money from a win rate. You only make money by managing your trades, by controlling your risk, making sure your risk is the same on every single trade. So you're managing the trade. It took me 3 steps to get to that point. It didn't take me a million steps. I didn't have a million indicators. And effectively, all you have to do is take a trade to make that happen. Very simple, very easy, very uncomplicated. I'll take questions if there's any questions. I just thought I'd go through that again for you guys. I know it seems like I'm repeating myself on a regular basis, but trading doesn't change. Trading always remains the same. And if you keep looking for a new magic pill, in all likelihood, you're probably going to go the wrong way, and it's probably not going to work out for you. Because every time you change the magic pill, you have to learn it all again, and it all goes pear-shaped and goes the wrong way. So just try and keep it simple, keep it the same. Makes it easier. Right. Let's have a look and see. Let's have a look at the questions. First, we go through the whole scenario, the whole course, and then we answer questions. Let's have a look. Okay, FX Exchange says first time here, excited to see what Rob offers. Well, what I don't offer is a whole bunch of, look at me, look at how much I traded, I bought this, I bought that, and little charts going up and down, and little fancy things flashing in your face and things like that. What I offer is what I just showed you, a little bit of information, and then a nice chat with the community. We've got a wonderful community here, and we talk together. We trade on the 4-hour generally because it's more peaceful, and we don't try and, change the rules or look for magic pills. We understand there's no magic pill in the market, and that trading's a career, and it's not that simple making dosh on the market. It all sounds easy, looking for trades. It all sounds easy, choosing the bottom, choosing the top. But go ahead and try it. Go ahead and choose the bottom of the market. Go on, you tell me where the bottom of the market is. Let's see. What is Rob's background? Does he come from institutional background or experience? I am not an institutional trader. I've come from experience, okay? Everything that I bring up here is self-taught over a period of 34 years, okay? 34 years of trading. That doesn't mean I'm old. It just means I've been around for a long time. And yeah, no, I've never been an institutional trader, not at all, mainly because I've never really wanted to work for anyone else in the first place. And yeah, I've always kind of worked for myself since I was about 27 years old. I did work for a corporation up until that point, but not as an institutional trader, obviously. I actually started trading around that time by myself, learned with experience. And it's not that I sat in front of a computer trading for 34 years. I've been a trader for 34 years and an investor, but I've had businesses in between, other things going on, life, that sort of stuff. I did do many other things in between as well. Why do I have a YouTube channel? You know why? Because it keeps me busy. It's something I enjoy doing. I've targeted trying to achieve this as well, because when you've got other things going on, the trading's in the background, you stay busy. But you reach a point in your life where you don't want to have any more businesses or things going on that you have to get up and go to. And then all you've got is the trading. And that becomes kind of boring, because Boring is where the money's made. Exciting, you're probably going to lose money. So yeah, it becomes kind of boring. There's not much to do. So you find things to keep yourself busy. So I found this to keep myself busy. It's exciting. I enjoy making YouTube videos. Okay, so there we go. Not 50-50. My win rate is 16% crypto or something. Sometimes you are accurate, but it hits stop loss. 16% win rate. You know, as long as you're making a huge win on the wins, then that doesn't matter. Like I say, win rates don't matter. Win rates don't matter. Do you know what matters in trading is profit? That's all you need, profit. You just need to make a profit. It boggles the mind how many people are always coming to me and talking about win rates. And I think, what is the point? What is the point? What's a win rate going to achieve you, apart from a bit of boasting rights, I suppose? I can have a win rate today. I can have a 90% win rate by simply taking every single trade that I want to look at and say, oh, here's a trade. I'll take this trade. There we go. I'll take that trade. Let's just buy that. And then if it wins 20 bucks, I'll sell it. And then, oh, I won that trade, and go to the next one and do the same thing. Scalping, effectively. But if I keep my targets really close and my stop loss is really far away, or maybe I don't stop loss, maybe I just hope that it comes back and I break even, like a relief, something like that. And then I just call it a win, and then that's a win rate. No. That's not how you do it. It's not how you do it. That's not going to achieve anything, is it? It's not going to achieve any kind of success, is it? Our VIX is doing quite well. It's actually quite a nice trade. What did we call today? We called Euro US dollar. I did call it short, but it's kind of suckling around here, struggling along, but you know, I'm still calling it short. Okay, so where are we? Maybe stop loss too tiny margin. BTC looks like a good buy around 55,000. Thanks, Rolf. Love hearing your experience, people. What do you typically trade? Forex futures? FX, Shane. I typically trade indexes and Forex. And well, look, I'm the type of trader that will trade absolutely anything. In other words, orange pills. If you put it in front of me, I'll trade it. My favorites are Forex and indexes, and commodities, of course, commodities as well. You know, gold, silver, copper, you know, those types of things. I'll trade all of those. Okay. Lately, crypto's crept in, so I'll trade that as well, because it's tradable, because it's a tradable commodity. It's there as something I can trade with. So investment wise, I feel that crypto is built on fresh air, so I won't invest in it. My investments are all in shares, individual shares, and there is, I'll admit, an S&P 500 in there as well, and an exchange traded fund that, yeah, I'm invested in as well. But other than that, all shares, because shares for me, you just keep putting it in there over a period of 30 years. It turns into a fortune. You wouldn't believe how much. Go look for the video on my system where I actually show you how money grows if you just keep investing in shares over a period of time. And then on top of that, you get the dividends from that. Shares pay you dividends, which are excellent. So I quite like doing that. So yeah, Blue Mango, you said 55,000 is a good buy. I did note that there's a head and shoulders on the day on the Bitcoin. And I can see that the head and shoulders is pointing to a very far distant 40,000 when it comes to Bitcoin. So if this head and shoulders plays out, if this pattern plays out, you're looking at a serious correction on Bitcoin. It could land here by the 55,000, like you say, because there is a level here. There's obviously a support level there. But the distance for the head playing down is all the way down at 37,000, which is quite serious. It's very serious. Will it get there? I don't know. I really don't know, but it could. And I've seen these things play out, and it can be quite daunting. So, you know, for the guys who are expecting it to go up, it could turn and just change. And if it breaks the shoulder and goes up, then it's going up. But as it stands at the moment, that thing is there, and it could be painful. It could really it could really send you down into the pits of whatever. Okay, right. So, Aussie dollar, Canadian dollar, Beverly, I'll have a look for you shortly. Okay, measured move 30. The measured move is 38,000. Yeah, Blue Mango, that's what I saw as well. Will it reach 38,000, 37,000, 40,000? I really don't know. I mean, it just, in my experience, in my years and years of trading, there's nothing that in the market that when it seems implausible, you'll be surprised how plausible it is. When you look again, it's happened, and you think, wow, how did that happen? That was not plausible. But the market can do funny things. So yeah, I'm expecting that it could actually go all the way back down to 40,000. So what I'm looking for on Bitcoin and crypto at the moment is short trades. I prefer short trades. So in other words, what I do when I see something like that, I don't walk away from Bitcoin and say, oh, I'm not going to trade it. No, what I do in Bitcoin is I look for every possible short trade that is available. So if there's a short trade, I'll take it. I don't trust the long trades anymore for a period of time. Until it gets down to that level, then I'm buying, most likely. But will you have the courage to buy when something's fallen that far? Ask yourself that question. It sounds easy. It sounds easy. You know, I once watched a guy on a YouTube video. Of course, everybody watches a guy on a YouTube video like me, you know. And that guy said, oh, it's easy to turn $5,000 into $100,000 or $1 million. All you got to do is throw it all in when the market's at the bottom. Okay, so which one of you guys here on the show today, how many of you are here? Not a lot, but okay. Which one of you can tell me where the bottom is, okay? And when Bitcoin gets to 38,000, let's say it gets there, which one of you will have the courage to throw everything you've got at that trade and say, I'm buying that now? We'll have a look and we'll see. Okay, so somebody asked for, I think it was Australian dollar, Canadian dollar. Yeah, Australian dollar, Canadian dollar. So let's have a look at Australian dollar, Canadian dollar. There we go. Let's just push that over there. Just go and have a look at Australian dollar, Canadian dollar. The easiest way to do it, Beverly, is to, you know, I haven't got any indicators on here looking at this. This is just a very bullish chart. So what I'm going to do, I'm going to take it to the day chart and try and identify where my areas of interest are. Okay. What I'm seeing here is a lamp pole on the day, lamp pole formation. What do lamp poles do? If they're not nicely secured, they tend to fall over. So what I'm seeing here is a bit of a lamp pole. So it could fall over, could definitely fall over, but it's insanely bullish as we stand. Look at that level there. That's an interesting level. Point there, point there. Could be a bit of a double top, but it's bounced a bit higher, so it's broken through that level. Your main area of money is down here, which it's already broken. It's already broken through that. That's quite interesting, actually, that that's already gone. So that level is no more. And then the level at the top here, not much going on there. So what I would do here now, let's just go back and just see what we've got here. Let's take it back to the H4. Is this something I would want to trade? You see, you could say there's a level at the top here, which would give you a resistance. Yeah. Let me just take this. And I'm just going to take it from here across. Okay, I just want to see what that gives me. Maybe a little bit closer. So what I'll do, if you're already short, you're already short because you got a double top that it's come off the top here, obviously. Sorry, wrong one. So let me just delete. Don't suppose I can delete that. No, okay. So you've got a double top that it's coming off here, kind of a resistance. Let me just make that green so we can differentiate it a bit. There we go. All right. So we do have a form of resistance. We do have a form of support. We do have a trend moving to the upside. You've maybe taken the short off of this double top. Is it short? Not really yet. Not actually. It actually needs to break through this level, but if that's what you're playing with, then that's fine. What is it looking like on the daily? As it's bearish. There's an undecided candle on the weekly. On the weekly, it's very bullish, insanely bullish on the weekly. And the weekly is pretty strong. So I would be careful. On the short, I would wait for it to break through this trend. If it breaks through this trend, then I'll look at the short. Give it a go on that. As it stands at the moment, insanely bullish. I would be very careful about taking the short trades here. It's not really ready for that short just yet. Okay. And I actually think that it could turn against you and go up. Also, what you can do, this is the Australian dollar, Canadian dollar. I understand that it's not the US dollar, but if you go to the US dollar, Canadian dollar, it's kind of looking bullish and it's kind of pushing to the upside, but there's a head and shoulders on the day. So this could turn and go crashing down big time, and that could give you your trade on this particular product here. On the day, I'm not necessarily seeing any head and shoulders or anything like that. I'm just seeing lamp pole formations, and lamp pole formations are interesting at best. And let's just put the gold on here. How does the gold look? Very interesting. There's your gold trade. As I said with gold, all the way down, dead cap bounce or relief trade up to the middle, created a new level here, and then starts coming down, starts falling off to the bottom side here. Okay. Can I please get your thoughts on cocoa? I'm not sure if you use CO2 data. However, the commercials are net long for the first time since 2018. Yeah, good counter trend trade here. I must admit, I don't trade cocoa. I can't really give you good thoughts on it. The reason I don't really bother with it is liquidity. I look for products that have got really, really good liquidity. So I don't really use I don't really use cocoa as a trade. I would take profit of 94990. I actually don't even know. Let me just check if I've even got cocoa on my system here. This is a product that I don't normally even look at. But yeah, should I even? Nah, I'm not even going to go there. That's okay. There's a go flag. Just use the same principles that I use on all the charts and it'll be fine. Look, cocoa, I just don't trade it because it generally, it's, how can I put this? Just, it's not liquid enough for me. It's not something that I actually look at. Then, Germany, the DAX. These things, this is hit resistance. Let's just take it to the day and let's just see what it's looking like and see where we are here. Yeah, that looks pretty good. Looks fine. Looks like that can stay. That looks like that can stay there. It looks like pretty short. Indexes are looking pretty short at the moment, I must say. It's interesting how short they are looking. Just having a look. Interesting. Very interesting. Okay. Just saw a couple of phone calls come through the phone there. Just hope they weren't important. I do have somebody lying in hospital at the moment, and it could be tricky. Okay, that's fine. This is the Dow, and the Dow is in a range. And as I said to you in the beginning, we trade the three ways. We trade with the trend, we trade in a range, and we trade the breakout. So a breakout would be if it breaks out or breaks down from the resistance or the support. So in other words, goes on and runs away. It's a bit like the turtle traders. And then you get these counter trades on the trends as well. We trade those as well. Counter trades, we trade on that. And those are the simple three ways that we trade. Makes it easy. Hi, Rob. I recently saw a video of yours where you say you can trade with just a line. How do you figure out the stop loss for the trade? Also, how do you catch the moves at the right time? An interesting question. And you have to understand the concept when I say I trade with just a line. When I say I trade with just a line, you'll see on my charts here, I've put the resistance and I've put the support in. So that's two lines, okay? So for everyone looking at it, they'll be like, oh, you put two lines in. And then I'll put the trend in and they'll be like, oh, there's three lines. So what you got to understand is I trade with the one line that I'm working on. In other words, if I'm trading on the resistance, I'm trading with that one line at that moment in time. The support is still there. The trend might still be there, but I'm trading with that one line. If I'm trading on a trend, I'm trading with that one line. What I find a lot of traders doing is putting line after line after line after line after line after line, and I'll just keep on going line after line after. Just doesn't stop. Just lines all over the chart and moving averages and crossovers and MACDs and indicators and RSIs and Fibonacci's and it's just one big mishmash of lines everywhere. When I say I trade with one line, I will have perhaps more than one line on the chart. Like I said here with the US dollar, Japanese yen, I might be trading only with that resistance, or I might be trading only with that trend. It means I'm trading with that one line for now. I'm not bothering about the other line. So that's what I mean when I'm trading with the one line. How do I work out my stop loss? How do I work out my stop loss on any given trade? It's easy. I look at the trade and I say, if I was to go short on this trade, I'm just going to use that as an example. I wouldn't go short on this trade right now, okay? Because it's not ready to go short. I'd wait for it to break structure before I went short. I'd probably go long, and that would be the resistance. So, okay, let's have a look at the long trade. Just purely out of interest, let's have a look at the long trade. So let's say we go long over here. I'd put my stop loss below the prior low. Prior low, that's where it's probably invalid. Okay, it's broken structure. It's broken through that trend structure so that if it gets down to that level, this trade's invalid. And then I'd say I'll take my take profit up there. This is not a trade I would take. Why would I not take this trade? And anyone here tell me why I would not take this trade? There's only one reason. The risk to reward is wrong. I can only make $913 for a stop loss of $972. That's not even one-to-one. In other words, I'm risking more to make less, and that's just not the plan. That's not going to make me any money whatsoever. So let me have a look at, let's say we were to take a short trade on here. So if I was going to take a short trade on here, I'd put my stop loss above the prior highs, okay? And so that's where I want my stop loss. That's my risk. That's how I work out my stop loss. Then I'd look and see, where is my take profit? How much profit can I make on this trade? So I'll have a look at different levels because I'm going to follow my stop loss behind it. I'm not just going to take profit. So my first take profit would be somewhere down here. That isn't a good risk to reward. That would be a very poor risk to reward. I wouldn't take that trade. My next take profit is down here below that level. That one's good. That's 1.5 to 1. That's a decent take profit. I can look at that. The next one over there, that's a 2 to 1. That's a decent take profit. I can look at that. And then all the way down to the bottom where the main support is, that's a good risk to reward. 6.5 to 1. That's going to give me a really decent trade. So if I was looking at a short trade, that might be worth my while. That might be worth something taking. And that's how I work out my stop loss. The stop loss is behind the prior highs. In other words, if the price gets there, it's invalid. It's no longer a short trade. It's becoming a long trade. I don't want the trade anymore. I'm not going to move my stop loss away. I'm not going to try and dollar cost average. That's my stop loss. And that's how I look for those areas. And like I say, as far as the one line goes, I'm working with the one line. I'm working with that area of interest. That's all I say about the one line. Is I just find that traders have far too many lines on their charts. Over here, I've got 4 lines on my chart. That's one too many already. But there was a necessity for it. I'm looking at 2 angles on the trend. I've got my resistance, I've got my support. That's it. But I'm not working with a support line right now. But I am using it for a target, for a take profit. I am using the resistance for a target, or maybe the stop loss. But further than that, not interested further than that. I only need the one line that I'm working with, and that's it. You know, you start looking at 20 different lines that you're working towards or trading with, you're just going to overcomplicate the whole system. So when you say, how do you figure out the stop loss for the trade? And how do you catch the moves at the right time? So how do you catch the move at the right time? Now, that's an interesting one because this is one that I bring up quite frequently. If it's in a trend, so every time the green candle bounces off the trend, you can buy. Every time the green candle bounces off the trend, you can buy. You can buy it in structure. So every time the structure comes down to the trend, you can buy it, it goes up. So you can watch your structure. Same when it's going down, you can watch your structure. Get in at the right time. When the green candle closes, you can buy. Or when it hits resistance and you get the red candle down, it closes, you can sell. Or if it's at the bottom and it gets down to the bottom here and gives you a green candle up, you can buy. Or if it breaks out. So if it breaks through this area here, let's see if we can find one that's actually doing something like that. I think Bitcoin. So for example, Bitcoin. It breaks through the support. There you go. Red candle closed. The next candle is even a nice little sort of hammery candle. So you're like, okay, you know what? This is broken to the downside. So this is a sell. What a lot of traders would do on a breakdown or a breakout, doesn't matter which way. This could be green on the top. It's red on the bottom. It's going down. Okay? Surely I don't have to do the mirror image trade for you. So you got the red candle. It's closed. You got another candle confirming that trade. For me, just take the short and go. It's short. Right? You're going with it. It's short. There are a few other things on this particular trade that might confirm that, like the head and shoulders or whatever the case. But on this 4 hour, it's broken to the downside. The red candle's closed. You can take the trade short. A lot of traders will wait for it to retest. In other words, a breakdown and retest or a breakout and retest is when it comes down, goes back up, hits the line again, gives you another red candle down. And that's the retest. And then you can sell from that point, sell it down. The retest doesn't occur 100% of the time. This is my issue with retesting. Now, some people might call it a FOMO trade from my side, fear of missing out, which is something that traders suffer with. And I suffer with it insanely. FOMO is one of my worst things. I don't want to miss out. So yes, a lot of people will call it fear of missing out. But what I call it is if I look at a trade and I say there's a lot of things pointing in that direction, a lot of things telling me to go short. So in all likelihood, it's going to go short. So might as well just take the trade. And if it goes back and retest, that's fine. It'll probably come down anyway. But if it looks really iffy, if it doesn't look like a trade that will actually work out, if it's my maybe sort of scenario, then that kind of trade, I'll say, no, there I'm going to wait for confirmation. For example, on this US dollar, Canadian dollar, I got a head and shoulders on the day, which tells me it should go short, but it's bounced and it's gone long and it's broken structure here. And it's broken through this trend resistance, green candles going up. You should actually buy it. But there's a few iffy things here that are saying to me, maybe you shouldn't buy it. So on that particular trade, I'll wait for the confirmation. I'll wait for the retest. If I get a retest and another green candle bouncing up, going past the shoulder, I'll buy it. But then I've got that confirmation. I've got that in my arsenal. So you can use the retest when you really need to. But what I always say is, if you don't need to, why do it? You know, if you know that that's definite, then just let it go. This has created a new level, a new top. I said the other day when this came down, the gold, and hit the support, bounced back up, said to you it's going to bounce, it's going to be a relief rally, a bit of a dead cat bounce up, hit halfway, normally goes about halfway, it's hit the level, pinch the top, and now it's coming down again. There's a good likelihood this is going to come all the way down, and it's broken structure. So this is why you use the structure line. You see here, if you take that there and put it through on the 3 touches, it's broken structure, broken support, and it's moving to the downside. So you can expect this to continue its fall. Interesting, but true. Okay. So I hope that helps. I hope that answers that particular question. So yeah, when I say I trade with one line, I kind of, I use the line that I'm working on, but generally you're going to find that the resistance, you're going to find the support, and you're going to find the one trend line. That was just something that I used the other day. Very often I used to use the blocks quite a lot, but I'm just lazy. I don't put them in. It's easier just to draw a line in. So just remember that you can just draw the line in and it'll just work out the same old way. I mean, you don't need to draw the little blockies in all over the place and whatnot. Not necessary. The reason we draw the blocks in is that a line, there isn't a line in the sand with the markets, because you're not trading against charts, you're not trading against candles, you're trading against human beings. And human beings have a general area that they work in. So that general area might be that area that they're working in. So you know that if it goes into that area, that's the general area where you're going to pick up liquidity, you're going to pick up orders and things like that. That's where the institutional traders, you're looking for where the institutional money is, effectively. That's what you're looking for. So yeah. Good, glad that helps. Glad it's useful. It's interesting. Always interesting. Yeah. Boom. Let's just see here. Okay, what else can we look at? Then Australian dollar, Canadian dollar, you guys were going to look at that. I'm going to just put the cocoa on for FX, yeah. Just, where were we? Okay. What did you say about cocoa? Not sure that over the commercials along for the first good counter trade, yeah. Not sure if however the commercials on net long for the first time since. If you're going to trade cocoa, I don't know. Did I look at this in the past? I got so many lines on here. This is weird. I'm gonna get these lines out of here. I can use that. That's fine. But these ones are really quite crazy. I mean, I don't remember ever looking at cocoa, but obviously I did. For whatever reason, I must have looked at cocoa. Maybe one of you guys asked me at some time or another, and I drew 1 million lines in. This is actually a downside to MetaTrader. You always find these things on your system lying around, and I don't know why it does that, but it does do that, and it can be irritating at the best of times, but you can get rid of them. Okay, so what I'm going to do with this, I'm going to take that out of the way again, and then we're going to just go and have a look here quickly, because you wanted to look at the counter trade. Let's take it to what is on the day chart. Okay, that's interesting. And then let's just take this down. It's interesting to see what you've got here. All right, let's put it back on the H4. There's not much to talk about, really. What I'm going to do, I'm going to say that there's an area there. So it's run quite far. It's run that whole area there. Bring that back. And then I'm going to take it back to the H4. Just see what you've got here. Yeah, see, not much liquidity. Yo. This is not a very liquid product at all. And you could make some money on it, because if I look at it, yeah, if it breaks to the upside and breaks through that trend there, that trend resistance, then you might have something going. But liquidity is always an issue here. I can see the bitsy sort of candles. It's going to be big swaps between the two. So just watch out for that. You know, you're going to pay far too much for it. Let me just see here, 411332, 415280. Look at the difference in the buy and the sell here. It's insane. It's huge. Don't do it. Look at that. That's massive. No. It's too much. You look at US dollar, 117.87, 117.87. It's almost the same. Okay? And then you look at US dollar and Japanese yen, you know, 115, 57.21, 157.21, 0.4, 0.3 is the swap, 0.2. You know, like it's okay. You know, you can trade these things. They're close together. Even my VIX is really close together. Cocoa, it's like a million miles apart, the buy and the sell. No, there's just not enough liquidity in that to do a deal. It's going to cost you money. You know, if you buy it, you're sitting in it before it even goes anywhere. That's why I don't trade it. Edward, welcome to the membership. Wonderful to have you on board. Absolutely excellent. Glad. Thanks for supporting the channel. And I love it to bits. Like I said earlier, I enjoy making these videos. It gives me something to do, and it helps me grow something. I love growing things and making things into something. I just reached a point where I don't want bigger businesses and things on the side anymore. I just want to relax a bit, enjoy life. The trading is still there, but trading is kind of insanely boring. So yeah, if there's something else to do on the side, that's absolutely excellent. Okay, so oil, I love oil, as you guys know. I love oil. So oil's on the move up. It's moving up nicely, cruising along here at a relatively good speed. So I think oil, but I just want to see here, because I was looking for another buy on the oil, but they said that it's coming down a bit because Iran's having a chat with America. I don't know, but it doesn't look too bad. It looks like a reasonably good deal. Will it go all the way back up again? Who knows? We did make some money out of it the other day. I just got here. Needs to rewatch from the start after the session ends. Yes, you do need to rewatch from the start, because I went over the whole process of the 3 ways that we trade, and of course the 3-step strategy that we always use. So yes, you need to go back to the beginning and watch that whole part of the video. That's quite important, because that's where all the trading happens. The back end of the video, where we are now, is actually more about just chatting, chatting and answering your questions and that sort of thing. Being short the US 10-year note for 3 weeks now, long hold for you. It is a long hold, and I don't trade the 10-year, the 2-year, the 5-year. I don't really trade those bonds because of that exact scenario as well. It just takes forever. Rob, hi. Single line trading. Should we follow the trend from the first low? How many lows or high does it need to make for a strong trend line? You see, trend lines are very subjective, as is the stock market, to be fair. I mean, it's subjective. Everybody thinks it's objective, but what you could do, right, is you could take, for example, a chart with absolutely no lines on it and just say buy and sell and take 12 trades. 6 trades you'll lose, 6 trades you'll win. As long as you win more than the other 6, you'll make a profit. But no human being wants to do that. Everybody wants to feel that they got some kind of a probability, some kind of an edge. We don't like to guess. We're not that type of person. We're not that type of thing. We like to feel that if we put 5 rand in a machine with a chance of winning a million, that we've actually got a chance of winning that million, that we've got some odds in our favor. So when it comes to drawing these trend lines, what I try to do is I try to pick the last low, right? The prior low. I don't want to go all, you see, if you take it to the day chart and you go all the way back down to the bottom here and you draw a trend line in, that's your strongest trend line, obviously, because you've gone all the way back to the beginning, okay? So if you go all the way back to the bottom here, you draw a trend line through here, that's your strongest trend line. And I get that, okay? So I draw this in, I put it there. It's going to take 3 weeks for it to get there. I'm not trading with that line right now. It's too far away. And if I do go back to my EIGHT4, that trend line doesn't even show up on my chart. It's down there, okay? So what's the point, right? We know it's there. We know it exists. We know that if it gets there and we look on the day chart, really important area, okay? But we're not using that right now. What we're doing now is we're looking at where we are on the EIGHT4, and this is the day chart. So on the day chart, we can see that it's bounced off the resistance, it's going down, it's bearish, it's got a relief trade going back up again, and the support's all the way down there. We know that. That's all the information we need. Now we go to where we're trading, and we say, well, we know that's our resistance, we know our support's down there in the pits of hell, and up here, we're dealing with what we're dealing with now. So what I'm doing now is looking for the last prior low, which is down here. That's where I'm drawing my trend line from. I need 3 touches on the trend line, which is why you've got this breakthrough part here. So what I've done here is I've said, well, okay, there's a breakthrough part here, which creates another trend line along there. And if I take it through that lot there, there's a lot of touches along the way there. So that is actually a stronger trend. There's quite a tight trend going up. So what I can decide to do is I can say, if it breaks that first trend, I'm getting in because it's breaking structure and it's going down. But it hasn't broken this structure. So what I've got to understand is that when it gets to this trend, it could turn around and go back up. So is it worth my risk to do that? Just work it out. So that's why I've put the 2 trend lines in, because there's 3 touches on that trend line as well. But the first trend is actually telling me it's worth taking the risk to take the trade and go down. Where do I draw it from? I'm not drawing it from there, but you can if you want to, or from there. You can if you want to. But I'd rather take it from the last low, the closest last low, and draw it up from there. And as I say, the further back you go, the stronger the trend line is, the more information you're getting from it. It's a bit like going down the time frames. The lower you go down the time frames, the weaker your information becomes. The higher you go with the time frames, the stronger your information becomes. And it's a similar scenario here. So the further I go back with the trend line, the stronger that information is. But I'm only using the trend line to determine if I'm taking a trade. In other words, if it's in a trend and I'm trading with the trend. I'm just determining if it's bouncing off that trend line and carrying on up, or if it's breaking the trend. I'm just determining whether I'm taking a break of structure trade and going the other way within my range, within my resistance and my support. That's it. If it breaks through the resistance and it's going up and it's within a trend, great. Then you've got 2 bits of confirmation. That's basically the way we trade. I hope that answers that question for you. I hope it makes some kind of sense. You see here, I've drawn a very large trend line in. And I got my reasons for it, because this has been a very long process down here. And it's drawn on the H4. It's not drawn on the day chart, so you don't have to worry about that. I've taken it from that high there because it sort of, you got to feel for these trends. And this has been trending from there down nicely all the way down here. And you can see that trend just sort of falling off. You see there, it was up, it tried to go down, it tried to go back up, and you get this like fall from that point. It's like going down a mountain. You know, you sort of go back up and then it goes down, and you're going to look all the way down from the part where it's going down. And then you just follow it down, follow it down, follow it down, follow it down, follow it down. 3 touches, you've got a trend. That's all you're looking for. You could, if you wanted to, take this trend right here and say, oh, it's broken structure, it's going up. But there's a resistance here that I'm waiting to see that if it's going to break through that and go back up again. So that's quite important on this particular trade. So sometimes all you got to do is make your chart a little bit wider so that you can see what's going on. Okay. Do you take care of the daily support? I understood better, thank you. Okay. And the daily support, yes, the daily support is always in. So you always put the daily support in, and you know that it's there. But as I said, I only trade with the one. So if it's closer to resistance, trading with the resistance. If it's closer to support, trading with support. If it's on the trend line, I'm trading with the trend line. I'm not going to concern myself with where the support might be at any one time, but there's the support. It's so far away, and I know it's there. I just know it's there, so it doesn't bother me. I know that my risk to reward is good on a short trade if I get a short trade, because the support's so far down. That's my daily support. I know where my daily support is. I know where my daily resistance is. That's my level that it's in. Just that the last few days it's been there. That's all. Easy stuff, actually. The only time I don't concern myself with this is on the VIX. The VIX, we wait for a spike like that. Those kind of spikes are what make you the money. So you wait for that to spike and make you that money. When it gets there, push it away and keep trying to push the price up. That's all you do. The VIX is easy. Just keep it forever. I don't even bother with it. There is a stop loss there, but I don't bother with it. Really not important. See there, now your gold, for example, it's created a support. It's created a new resistance with this bounce. It's bounced, it's hit the resistance, coming back down. It's broken structure on the trend. This has got everything in it that we talked about in this video. It's got your resistance, it's got your support, and it's got the break of structure. It's breaking the trend support structure to the downside. Probably come down, hit that support. So what you're doing here, you're looking for a short trade with a stop loss above the resistance, above the prior high. So maybe take it a little bit there and then take profit down to there. Is there a good risk to reward? The stop loss, well, the risk is 720 on that and the reward is 990. It's okay. It's just over 1-to-1. It'll probably give you a reasonable trade. That's how you look for it. First thing you do is look for the risk. Next thing you do is look for the reward. If the reward is more than the risk, it's a reasonable trade to look at. Okay. What is gold in bullish? Gold is not bullish. Gold is now just turned bearish. It bounced, dead cat bounce up, it created a new resistance, hit that resistance, hit that, tops come down, it's broken structure, it's on a bearish trajectory at the moment on the H4, it's broken through, it's coming down, red candle, bit of a green candle here, but that doesn't matter. There's a bit of a red candle and it's broken and it could come all the way down. So gold, she's not bullish. Okay, right. The box theory is similar to one trend line, just two lines, support and resistance. Yes, same scenario. Yeah. Okay, Cartoon, you sound pretty happy about that. That's good. I like that. Lovely. Right. No, that's excellent. That's absolutely excellent. No, totally. Yeah. 3-step routines. Threes are a lovely number. I like threes. Threes are a good number. JP Morgan manipulating the precious metals markets again. I often wonder, is JP Morgan big enough to do that? Are they that big? But yeah, I get it. I mean, yeah. What about crypto? Who's manipulating that? I get that these big guys are moving the markets around. They really are. They know how to move it. They know how to manipulate it. They got all the information before everyone else does. But sometimes I wonder, are they as one unit big enough to do it? I think there's a whole bunch of them together that sometimes get together and do this. Although they are trading against each other as well. But this is standard stuff, this charting thing here, where you've had this long run up with the gold, this big fall down, the dead cat bounce or relief rally, and it's coming back down again. And it's coming back down again for reasons that are out there. So this is very much, institutions, as I said to you a couple of live shows ago, institutions trade into commodities like gold as a sort of place to put the money, a safe haven trade. Because when institutions trade or get money from pension funds, from people, from investors, from all these people that give them money, and they say we'll give you 10% per annum, and they go and make 40 or 50% on the money, just threw that in. They are not allowed by their own rules to have more than 5% cash at any one time. That's generally the rule as an institutional traders. Institutional traders prefer to, how can I put it, not have more than 5% cash, because what's the point? If you tell people I'm going to invest your money and I'm going to give you a certain amount back and we're going to put it into this fund or that fund in our company, JP Morgan, whatever the case, then surely you don't want to be sitting with cash, because cash does nothing, right? It just sits there. So what they have to do is get that invested. And if they see there's a bit of problematic situations going on with the indexes, the indexes are working against them, not working out, then they have to say, well, we've got to take that money and put it somewhere else. So what do? They go and put it in the commodities. They go and put it into gold and silver and copper and all these different places. They go and put it there, and that's a good place to leave it for now. And then it makes money and it grows because it's growing, because everybody's putting their money there. But then there comes a time when they say, well, that's all going to change because it's all going to go back into the indexes again, or shares, or whatever the case. So then gold and all the commodities start falling again because the big institutions are taking all their money out again. And then they see a problem, they put it back in. That's a bit of like, oh, we don't want to lose out, so we put it back in there. And then they see, oh, no, it's dead cat bounce, and start taking it all out. Or they fool all the retail traders into getting into it as well. So, yeah, commodities are very much used in that sort of scenario or for that situation. Okay, how can I trade in the 1 hour and 15 minutes? I'm trading with Top Step, and they're required to close the positions daily. I don't like funded trader accounts or accounts where they tell you to trade your accounts daily. I think for me, that's like a scam. I mean, I should be allowed to choose when I close my trade. If I take my own money and I put it into the market and I buy gold, I can leave it there forever. Whether it's leveraged or not, I can just We'll leave it there until hell freezes over. And then I can decide, oh, do you know what? It's frozen over now. I'll take my money out. You know, that's kind of how I trade. These funded accounts that tell you you must close your trade daily, what is that? Are they trying to force you day trading? They're just trying to get your money, mate. I don't trust them, and I don't like it, as far as I'm concerned, because how can you trade it? How can you tell you to close a trade daily? Because basically what they're saying to you, and I get it, there's this, like this EIGHTCAP thing that I've got, that these guys negotiated something with me, right? They came along and they said, yeah, give people 20% off, right? And you use code RobsLogical and you can get 20% off. It's a challenge, right? Now, they've also got something on there that says you can take a 1 hour challenge, an 8 hour challenge, a 5 hour challenge, and you can make a profit off of it. And that's great. That's wonderful. But once again, they're telling you that you can only trade for an hour, and if you don't make it, you're out of here. So it's pretty much a game more than anything. It's not trading, actually. It doesn't make me 100% comfortable. They do have, obviously, the normal thing, funded accounts, like, you know, that you can trade with, $100,000, $50,000 accounts, normal accounts. And what I appreciate about them, and the people that I promote in my links below, there's a few of them there, I think 3 or 4, EIGHTCAP being one of them, and they will give you a discount, is you can keep your trades overnight. You can keep your trades over the weekend. You can take as long as you want on your trades. You can trade over the news if you want to. So there's no stupid rules pulling you out if you want to trade with those guys. I prefer to trade with my own cash because I know that I can leave it there until hell freezes over and do what I want with it. So I don't appreciate the ones, random channel, that tell you to close the trades daily. If I was you, I would most certainly move on and find one that doesn't make me do that, because end of the day comes, you're in a loss. What now? You know, you're going to close it in a loss. You have to. You got no choice. Even if it's not really that bad, it looks like it might go up tomorrow. It's the same as the old adage that I spoke to you about, where I say, you come in to day trade and you say, I'm going to trade for 2 hours, make $200, and then I'm going to go down the beach. After the 2 hours is up, you're $400 in a loss instead of $200 in a profit. What do? You know, do you now close up and go away and then leave it, $400 in a loss? Or do you stay trading for the next 16 hours trying to get it back and make it worse? Because if you close it $400 in a loss, then your plan to make $200 has failed. So tomorrow you're going to come back. Not only do you have to make $200 for tomorrow, but you also have to make the $400 loss that you made yesterday. So now you have to make $800 instead of $200. That's kind of really jumped out in the park, hasn't it? Because it was $200, which seemed achievable. Now it's $800, which is suddenly not so achievable. So these kind of things don't work, and that's the same as them telling you to close your trades every single day. So that is a problem. Simple price action, the way it should be. I had told you that gold costs only 1 call on time New Year, and after that there's a little collection in gold. The strategy is my 8 years back test. That gold costs only 1 call time on New Year, and after that there's a little collection gold. Yeah. No, you can't talk to me on Zoom. And yeah. That's cool. I'm saying the wrong words, obviously. It's not a scam. I made some money. Sorry for saying that. It's okay. I didn't mean to be, I'm not saying that your thing is a scam or whatever. I don't like it when they tell you must trade out every single day. But yeah, if it works for you and you're making money out of it, fine. That's great. I got no problem with that. But yeah, totally. Prop firm rules make it easier to fail and prevent payouts. EIGHTCAP says prop firm rules make it easier to fail and prevent payouts. You know, that's kind of what I'm saying. And yeah, I I don't mean to insult anybody's prop firm or whatever that they're using. I'm just saying that it just doesn't seem right for them to tell you to sell it out every day. Why would they do that? What's the point? Why do I want a meeting with you, Cap? I mean, I see you've put a lot of messages on here. I mean, dude. Okay. So my strategy is very much my strategy for normal swing trading. Okay. Position trading, positioning in the market. Day trading is a different kettle of fish. You can use the same strategy, but you are going to have a scenario if you have to trade out every day where sometimes you're going to be in a loss, sometimes you're going to be in a profit. You're just going to have to apply the strategy that much faster. The big problem I find with faster trading and having to trade out every day or day trading or whatever the case is, the reason 99% of people lose there is because the information you get off the lower time frames is very limited, and generally the moves are too fast and people get taken out on a regular basis. Also, you know, the difficulty of actually being able to let your trades run, patience, that sort of thing. You see, one of the most important things in trading is patience, waiting for the trades to come to you, taking the trades when they need to be taken, letting the trades run when they need to run. You know, the FOMO, the fear, all these types of things. You know, the whole point of the strategy is if you take a trade and it starts running, you want to follow it for as long as possible. But if you're told to close it, you can't follow it anymore. That just becomes a bit of a tricky situation. So you can still use the strategy on day trading and you can still apply it, but you're kind of limiting yourself or being limited by having to close it prematurely, let's say. I mean, why do you want to close your trades prematurely if you don't have to, or it's not necessary? So yeah, it's not something that I'm big on. There are traders out there that apply it to themselves. They don't even have someone applying it to them. They just say, I day trade, so I close my trades at the end of every day, and there's no trades in at the end of the day. And if you want to trade that way, that's fine, if it works for you. But you have to understand that some of your trades will be in loss, some of your trades will be in a win. You see, what a lot of traders expect is that the charts are going to predict the future. So what most traders expect is that the chart's going to tell you whether it's going to go long or go short. They expect the chart's going to predict the future, and that's one of the biggest downfalls of the market. One of the biggest downfalls is expecting that somehow these charts are somehow going to predict any kind of future for you whatsoever. They can't. You can't predict the future. The charts can't predict the future. Absolutely nobody can predict the future. It's a horrible fact. Horrible fact. The funny thing about the stock market is that every time someone buys, someone sells, and they both think that they're astute, that they know what they're doing. Think about that. Just think about that for a little second. You know, it's just one of those things. So yeah, no, there isn't really a strategy for getting in and out quickly. It's you've got to have, trading is all about patience. It's all about waiting for the trades to come to you. It's all about following your winners. It's all about sitting in the trade. It's all about it being boring. And yeah, no, it's going to be difficult for you if you have to be trading in and out on a daily basis. It's not an easy one. not the way to trade, to be fair. It's definitely not the best way to trade. You know, investing should be more like watching paint dry or watching grass grow, or trading for that matter. That's what it's about. That's how you're going to make your money. Investing is all about watching paint dry, watching grass grow, trying to do things quickly, trying to make money quickly, trying to get money out of the market quickly is not the way to do it. Definitely not the way to do it. Okay. UK 100, that's actually quite interesting. That's gone up nicely. Bit of a nice bounce there. Boing, boing, boing. Breakout. Here's a breakout trade, guys. By the way, here's a perfect example of a breakout trade that I can show you guys. Hopefully you'll be interested. So there's a resistance that I drew in. There's a support that I drew in, obviously on the day chart. It's been trading in that range and we've been waiting for it to do something. It breaks up, big green candle. Now, you could have gone long on that second green candle and nobody would have said a word. It would have been fine. You could do that because, like, if you have FOMO like me, you will do something like that. But it did the perfect thing. It came back and it retested, which is what most of the traders will tell you to do. Wait for the retest, okay? I'm one of those people who probably don't wait for the retest, but you can wait for the retest. Then you get the green candle, bounces to the upside, and off she goes, okay? That is the perfect breakout scenario, where it breaks out, comes back, retests, gives you the green candle up, and off she goes. That is the perfect breakout. Okay, so if you're looking for a perfect breakout, that's it. Unfortunately, there are many that break out that don't come back and retest. There's quite a large percentage of them don't come back and retest. They just go straight up. You know, they don't always come back and do this, but this is kind of like the perfect scenario. It's crazy, actually. Interesting. Interesting to say the least. Yeah. So, yeah. So what I would do in the case of where you have to trade out every day is I'd look for a place where I don't have to trade out every day. Because I think that trading out every day is a bad idea. I do agree with, for example, I can see that what they're trying to do is they're trying to not get you to not keep your trades overnight. I can, you know, like I've said to you guys many a time, sometimes it's not a good idea to keep your trades over the weekend because things can go wrong. So that might be what they're looking at, but yeah, it's very difficult to do that. And yet they know that it's very difficult to do that. It's one of the most difficult things to trade. One of the most difficult things to do is to have to trade out of your trade every single day. That is probably one of the most insane, most difficult things to do. So much easier if you don't have to do that. I hope that has helped you guys a lot today. I hope that has given you plenty of information. Kevin, good to see you. Political turmoil in the UK just now. Isn't there always political turmoil in the UK? Isn't it kind of normal, like every day? I always hear these people talking about it. You know, when I used to watch the news on a regular basis, I spent my life watching the news and following the news and following the little institutional traders, and I would watch Bloomberg every day and CNBC, and it would drive me insane, you know, waiting for the smallest thing to manipulate my trading. Crazy stuff. And when I used to do that, I used to also watch a lot of that political news, and I think that also drove me completely insane. No, I don't enjoy it anymore, actually. I don't like to watch it because it's just, yeah, I'll tell you what, just crazy sometimes what I see there, what they say. So I don't bother with it too much anymore. I do keep my one eye on it, but I don't hold my hat on it anymore. But yeah, Samo's in big trouble, so I could dump more. Yeah, but look at the, okay, Kevin, look at the UK 100. I had it up here now. Where is it? I've lost it. Oh, there we go, down here. The UK 100. Look at this. It's crazy, crazy, crazy. Let's put it on the day chart. This is the UK, okay? So, wow, this is the index. So this is just going up and up and up and up. It's not stopping, and it's on a breakout to the upside. So this is the stock market in the UK. It's going up. Crazy, isn't it? So the stock market is continually going up in the UK. I get it that the Great British Pound might not be as happy. I mean, let's see if I can put the Great British Pound on here for you. Let's see, what should we put it against? We could put it against the euro, but maybe I can put it against the US dollar if I can ever find it. Where's it gone? Maybe it's already on. I probably already got it on. Oh, there it is. Aha. So difficult to find these things sometimes. So anyway, there you go. There's your Great British Pound, similar to the euro US dollar. Most of these things are playing out on the US dollar, but you've got this big run up. It's coming down a bit. So the Great British Pound is weakening a bit against the dollar. And then you've got the euro Great British Pound over here. There's the euro Great British Pound. And there you go. The euro's jumping up against the pound. So the currency is having a little bit of a flutter, but the actual index is just going to the moon. So while they're having all these political problems, you've got to ask yourself the question, why don't the markets really react that much? You know, the pound might be reacting a bit, but the market itself seems perfectly happy. Yeah, it's still rising. Random, do you have Bitcoins? No, I don't invest in Bitcoin at all. Never have, never will. I will trade it. I will trade it on a regular basis. I've told you guys this before. I'll always trade crypto because it's tradable. I'll trade orange peels if they're here to trade. I mean, I trade, all right? But investing, I will never invest in crypto because I believe that it is built on fresh air and it's a bubble. It's built on nothing. Bitcoin, crypto, and every crypto is based on this. Two traders. I buy, you sell. That's it. We make the price. End of story. There's no asset value. There's no company in the background. There's nothing holding it up. It has become maybe too big to fail. It's scary if it fails because there's some big money in there. But on that note, it's very much a situation of fresh air. I would rather do what I've done, and that is all my money is in shares. In other words, shareholdings, okay? So they hold the money, they pay the dividends, and they've got asset value. And if a company looks a bit pear-shaped, they announce their results at least once or twice a year. They can tell me the company's doing this or the company's doing that, or it's changing CEO, or we're expanding, or we're contracting, or we're changing our name, or we're moving to this country, or whatever the situation. It's a company. It has asset value. It has employees. It has something that's happening. Coca-Cola, it makes Coke. It sells it to everyone in the world. It has factories. Something's going on, okay? In other words, I can see something happening. It's got tangible value. And they pay me for owning them. It's fantastic. They give me dividends. They give me a share of the company. So that's what I invest in. That grows. And over 30 years, if you go and watch my video down there, and it's in there about investing, you'll see for yourself how much money you can make by just investing over 30 years and adding a little bit in every single month to make that investment portfolio grow bigger, or moving your investments around. The only time I sell an investment is set and forget. Only time I'll sell an investment is if I see the company is going pear-shaped. It's not looking good, or the word fraud comes about, or something happens in that company, then I will sell the entire stock holding in that company and replace it with another stock holding in another company. That's as simple as it gets. That's investing. But investing crypto, no chance. It's fresh air. That's all it is. Trade it, absolutely. And here's the perfect example. Crypto. Was it 125,000 just the other day before Christmas, right? You remember that? 125,000. Look where it is today. Is that 69,000 that I see there? Is that 50% of the value lost in Bitcoin? If that happened in the S&P 500, we would be calling the end of the world. In fact, we'd be calling a crash, we'd be calling doomsday. America would be closing down. It would be over. It would be like, that's it. We're in big trouble here. A 50% loss in anything, in an S&P 500, a Dow, a NASDAQ. Imagine losing 50% on that index today, or over the next 2 months, okay? Because this is like 2 or 3 months, right? That would be insanity. But on Bitcoin, well, that's okay. We've just lost half the price of Bitcoin, and that's okay. No, it isn't. It's not okay. It's not acceptable. It's not normal. And it's because there is no asset value. There's nothing to base this on. Nothing. So yes, that's my rant on Bitcoin. Hope you enjoyed that rant. Okay. How's your weather? It's been raining here every day since the new year, and we officially haven't seen one blink of sun in Aberdeen for 2 weeks. It's dark all day and all night. Well, Kevin, I have exactly the opposite to you. So luckily I don't live in Scotland at the moment. No, it's hot. It's so hot. And I have to tell you, Kevin, I actually prefer the cold, to be fair. It gets so hot sometimes and humid. I mean, I live at the coast, obviously, so the humidity, I have to expect it, don't I? Comes with a bit of rust and all that. But geez, February is our hottest month, okay? So I have to accept that I have to get through February in temperatures between 30s, late 30s, whatnot. But it's not as bad as I used to live up north. And when I lived up there, sometimes I would hit temperatures of 45, 46, 47. Okay, so those were hot. But down here at the coast, I think the hottest it gets is 36, 37. So it's not the end of the world. And even that's not for a long period of time. But yeah, it's been pretty warm. And the trouble is, if you take those temperatures and you add the humidity to them, then it sort of becomes like really hot. Like, you know, then you can talk about those 47-degree temperatures and things like that. So luckily, my house has got about 8 air conditioners in it. And, you know, you can just put them on everywhere. And, you know, there's only one room in my house that doesn't have an air conditioner. This one, my office. So I'm going to change that. I'm going to put one in. I've got a fan, but I've never put an aircon in here, so I'm going to put a small one in here. There's a small office. Yeah, definitely needs one. Every other room's got an aircon. Well, not every other room, but yeah, let me think now. The kitchen doesn't have one either. That doesn't have one. The bar's got one. Yeah, no, it's pretty much, I think this is the only room that doesn't have an aircon in it. Okay, crypto is growing tentacles everywhere, as I know you guys from. Pull their crypto, so you buy it, then loan it out to a website. You know, so you have an income off it. How do they know these websites are genuine and nothing is regulated, but so many of the elites of society are buying crypto like there's no tomorrow? The elites of society are buying crypto because it's trendy, right? So here's the thing. It's the FOMO, okay? They didn't want to touch it, just like me, don't want to touch it. But then it gets to a point where it kind of seems like, well, okay, everyone else is doing it, so maybe I should as well. That's kind of what it is with them. They don't know what they're doing. They're just sort of like, everybody's told them that crypto is the way to go. Crypto is the thing to buy. And there's this thing that's developed. I don't know, you know, human beings are like this. It's like when you're around certain people and the trend is in their favor. So, for example, if you're not that type of person, then you're out of the crowd, so to speak. And that's kind of what it is with Bitcoin. It's like, what, you don't have Bitcoin? Are you stupid? You know, that's kind of what comes up, right? So, yeah, that's so they feel like they have to be involved in Bitcoin, so they spend their money there. And sometimes I wonder, because they get all these rich people to spend their money in Bitcoin, and then Bitcoin does this and sucks away. Where's that money going? Someone's getting it. Someone sucked them in and then took all their money. Yeah, it's actually quite clever if you think about it. Quite interesting too. So yeah, just so as you know, that's where we are with that. Okay. You want to swap climates, Kevin? Yeah, it does get pretty hot though. That's for sure. It gets insanely hot. Guys, on that note, I'm going to be on my way. I'm going to hit the road now. I'm going to go and carry on with the rest of my day. I want to thank you guys for being here. I want to thank you guys for joining me on the live show. I hope you enjoyed it. I'll see how next week goes. We'll either have the one live show on Thursday, but other than that, we will try and have the two. But I am struggling with a lot of other things and issues with my father in hospital and stuff like that. So we will get around that, and then we'll see how that goes. But thanks for being here, guys. It's been fun having you around. It's been great. And we'll carry on next week. And don't forget to come back and watch the other videos. And for those of you who are members, I saw Edward said he became a member. Well done. Good for you. You get the trade of the day every single day. And we talk about other things as well. Thanks for being here. Have a good day. Make lots of profit. And cheers. Ciao.